It wasn't just a company, it was a miracle worker. Beyond Meat burst onto the scene with a groundbreaking promise to bring the taste of real meat to the plant-based world. But now that dream is looking more like a nightmare. On today's episode of the Infographics Show, we're revealing the real reason Beyond Meat failed. The demand for vegan and vegetarian alternatives to meat isn't new. Companies have been serving up alternative burger patties and nuggets for decades. But until recently, they weren't exactly convincing substitutes. Much of the time, they were composed of soy or wheat gluten, and while they didn't really resemble the taste of ground beef or chicken, they would do the job when smothered in toppings. Other alternative burgers eschewed the imitation game entirely, making patties out of wholesome ingredients like veggies, nuts, and seeds. When nice and crisp, they were more like a falafel than a burger. But then, tastes changed, and the market changed with it. For a while, the portrayal of a vegetarian or a vegan was basically a stereotype. You know, that one hippie aunt who tries to bring tofurkey to Thanksgiving dinner and then lectures everyone about the environment. Vegan restaurants, mainly found in big cities, usually had a menu focused heavily on healthy food and might give you a pamphlet to read while you sit and wait. But then, the new generation changed everything. Millennials and Gen Z started embracing vegetarianism in numbers never seen before, and they were bringing a different energy to the cause. The most common reason for vegetarianism or veganism among older generations was animal rights. Maybe that aunt is still spamming your Facebook feed with AI-generated cartoons of crying piglets. But for younger plant-based eaters, many of them are more concerned with the environment. Animal agriculture is a heavy contributor to climate change, especially the process of raising cows and pigs. For young people concerned about rising temperatures, going vegetarian or vegan seems like a way they can contribute to the fight. And the sudden rise in the tick-borne illness known as alpha-gal syndrome, which makes people allergic to red meat, has led many a grill lover going cold turkey against their will. And where there's a market, there's an opportunity. Meat was kind of the final frontier when it came to vegetarian and vegan substitutes. Over the years, there had been plenty of progress made on other fronts. Those who wanted dairy-free ice cream and yogurt found delicious options made out of soy, nut milk, or coconut milk. While chicken substitutes made out of gluten or egg protein became more convincing all the time, burger patties were still not as convincing. But companies were experimenting with recipes until they hit the perfect combo. And one startup found the secret sauce. Beyond Meat was founded in 2009 by Ethan Brown, and he was ahead of the curve. His mission wasn't just to build a brand, it was to fight climate change. But the meat substitutes of the time weren't gonna win anyone over. Brown didn't just need marketing, he needed science. And he found it in a pair of University of Missouri professors, Fu Hung Tsai and Harold Huff. They had been developing a new meatless protein since the 1980s, primarily based around pea protein, and it could work miracles. The first product launched by Beyond Meat was actually its chicken substitute, which was an easy seller and gave them the capital they needed to focus on their beef substitute. They released a product resembling beef crumbles in 2014, and then they got to work on burgers. They received investments from some of the biggest names in food, including Bill Gates and even Tyson Foods, a major meat-based competitor. Over the next few years, they raised $72 million in venture funding, picked up celebrity investors ranging from Leonardo DiCaprio to Snoop Dogg, and they even got Tyson to buy a 5% share in the company. And once the products got rolling, everyone was on board. Mostly. The Beyond Burger launched in 2016 and it was a big hit. These patties had a higher fat content than most vegan burgers, allowing them to crisp up while fried or grilled and maintain a juicier texture inside. The burger got some initial flack from meat producers for its long list of ingredients, but they were all natural. The core of the blend was pea protein isolate, combined with proteins from rice and lentils, among other things. There was even pomegranate powder and beet juice, and that explained the meat-like color and the ability of the burger to bleed while you bite into it. It was surprisingly believable, maybe just a little too believable. The product was a huge initial hit, leading to the company going public in 2019. Soon, a whole host of new products followed, including patties made for smash and stacked burgers, and a fava bean-based Beyond Steak for those who wanted a meatier bite. There was even a Beyond Mince for UK fans. It offered a fresh take on the spiced meat blend popular at Christmas. The company also continued to expand its plant-based pork blend with Beyond Sausage and used a similar blend. And one of the company's secrets was just who it got to roll out its products. Beyond Meatballs didn't make their debut on the shelf. They were first tasted on Subway sandwiches as an alternative to the traditional meatball marinara sub, and that went a long way towards selling people on the product. Many of the foods Beyond Meat sells alternatives to are designed to be flavored with sauce or other accompaniments. Underneath that burst of flavor, it can be hard to tell what the meat actually is. Sure enough, it was a hit, and the meatball soon joined the rest of the products on the shelf. Beyond Burgers also made some appearances at places like TGI Fridays and Carl's Jr., usually for limited engagements. But behind the scenes, it wasn't all bright lights. The company did have a few failures in its early years, including its first product, Beyond Chicken Strips. The company never found the right formula and had plenty of competition from companies like Gardein and Quorn, who had cracked the chicken game long ago. They discontinued it in 2019 to focus on beef and pork products. They would do the same in the 2020s with their attempt at Beyond Meat Jerky, a partnership with Pepsi. The first attempt at a shelf-stable product didn't work out due to texture issues. But Beyond Meat seems to be on a soaring trajectory. Partnerships were the order of the day for the company as it aggressively sought out ways to bring its products to the masses. Dunkin' Donuts was one of the first to embrace it, as it started selling a meatless version of its breakfast sandwiches in 2019. In 2020, Beyond Meat partnered with McDonald's for development of the McPlant, the latest attempt at a veggie burger for the mega company. Taco Bell joined the party in 2021, offering plant-based crumbles by the company in its tacos and burritos. Many of these options were short-lived, but the products were always branded with Beyond Meat's logo, and that helped to raise the company's profile. The company shot for the stars, but it may be about to crash back down to earth. For all of Beyond Meat's hype, it never reached the level on the stock market that many people expected. When it debuted, it roared out of the gate and reached an all-time high at over $234 a share in 2019. But it's been all downhill from there. In fact, the company has been on a consistent slide since its debut, dropping over 99% and sitting between the $1 and $2 mark most days in the back half of 2025. And as bad as that sounds, the bad news might not be over. It's currently undergoing another major stock slide, and investors are wondering if it might be too late to stop it. As of 2025, the company is in serious debt, reportedly around $1.2 billion worth. Its bondholders are running out of patience, and in October 2025, the company's stock slid over 58% to its lowest point ever as the company negotiated with them to manage its debt. The plan was to issue around $208 million worth of convertible notes that'll be due in 2030 and distribute 316 million new shares. This bought the company some time, but it also diluted the shares' value significantly for existing shareholders. And not even the power of the internet could save them. Beyond Meat had fallen to its lowest point ever in October, dipping below $1 a share briefly. But while it recovered slightly, it was still in dire straits, and that made it deeply inviting to a certain kind of investor. The meme stock crowd, investors who flock to companies usually written off as junk, has turned shares of GameStop, AMC, and others into wildly unpredictable rockets. The chaos rippled through the financial markets, forcing firms that held the stock to cover sudden losses, something they couldn't afford. And after the GameStop saga played out, it left a lasting mark on online trading itself. But it wasn't to be for Beyond Meat. More bad news hit the company at the start of November 2025 when the company announced that it would be delaying its earnings report for the third quarter. Instead, it'll be pushing it a week and reporting it after the close of business. The excuse was the company needs more time to calculate a specific charge relating to some of its assets. But most insiders expect the report to be grim and maybe send the stock to a new low immediately. Recently, the stock had fluctuated a lot, going up to nearly $8 a share, thanks to its meme stock status, but that was still little more than 3% of what its initial high was, which led many people to wonder how could things get this bad for one of the top companies in the field. If you ask Wall Street analysts, it's not just one reason. The company is in bad shape because it's in a highly competitive field, one where companies have relatively little room to adjust their strategy. It has no pricing power because it's selling what's essentially a commodity, and food prices are usually set by outside factors. After all, when is the last time you saw a company decide to slash its prices to get you to buy more at the grocery store? This and the rising competition in the field has led virtually every analyst on Wall Street to tell people not to buy the stock, and some say a comeback might be impossible. If there is one reason for Beyond Meat's epic fail, it's probably the competition. After all, just because you are the first in the field doesn't mean you are the ultimate winner. No one remembers that Hydrox was the first to market when they enjoyed the latest Oreo flavor, and 2 years after Beyond Meat launched, it was followed by Impossible Foods, a startup company developed by Patrick O. Brown, a biochemistry professor from Stanford. By 2016, it was marketing the Impossible Burger. Many of its components are similar to Beyond Meat's, but it has one X factor the other company does not. It created a synthetic form of heme, the molecule that gives meat its blood red color. This not only creates a more realistic color, but it adds to the meaty flavor and makes it incredibly convincing as a meat substitute. The company has been increasingly aggressive at getting its product on the menus of big chains and has found success at Burger King, White Castle, and even Little Caesars. The product has even been used by top chefs like David Chang, who has been spotlighting new plant-based options. While it has the most success with its burgers and other beef-like products, it also competes with Beyond Meat on plant-based pork and has had more success with chicken-like products. It has a larger product line and a bigger reach than the competition, and that has paid off in a big way. Impossible Foods is still a private company, but its value is still in the billions of dollars, and if it ever goes public, it'll dwarf Beyond in the stock market. But that hides a bigger problem for Beyond Meat. Impossible Foods is seen as the cool kid in the industry, and that kind of reputation is almost impossible to beat. Its products are on more menus and in bigger chains, and the company has had more success with branding its products in a way that makes non-vegetarians ready to try it. And the field is only getting more competitive. While Beyond Meat and Impossible Foods have had amazing success in expanding the market for vegetarian and vegan alternatives, they haven't cornered the market by a long shot. Many of the alternatives that started long before them are still out there, and they have their own devotees. Sure, many of them have a very different style, harkening back to the old days of more earthy alternatives to burgers, but they appeal to a different type of vegetarian and vegan that is still out there, and they don't want their burgers to look like meat. Beyond Meat and Impossible Foods strive for realism, and that means making it look like your rare burger is actually bleeding as you bite into it. And that's the last thing many plant-based eaters want to think about. Whether they avoid meat for animal rights reasons or for health reasons, these burgers are just a little too realistic for them, and they prefer to stick to the competition. These include choices like the veggie-based burgers from Morningstar Farms or Dr. Praeger's, many of which are lighter on protein and are filled with a combo of vegetables, starches, and legumes. These companies also make popular chicken nugget alternatives, still dominating the market for nugs lovers, along with the startup Corn, which makes a chicken substitute that combines mushroom protein and egg protein. But the biggest problem for Beyond Meat is meat isn't dying. As good as these simulations of meat are, they're still not meat, and the true meatheads know the difference. Complaints about the quality of both the big meat products generally center around the unconvincing texture, the burgers falling apart on the grill, and the sear not being quite right. Sure, it'll do the trick under a blanket of toppings and condiments, but plenty of people are still sticking with the good old-fashioned original, especially if they're a fan of grilled steak, not a burger. And now the pendulum might be swinging the other way. In recent years, a pro-meat movement has been surging among people, a backlash to what many feel is a media-driven push to eat less meat. This has come from several directions, including political pundits who advocate for eating meat as a way to regain your masculinity, with some even advocating for eating raw meat regularly, to the horror of doctors everywhere. Other backing comes from dietitians advocating low-carb diets like the paleo diet, which urges going back to a primal style of eating. While the health benefits of these diets is heavily debated, they have plenty of fans, and that is driving up the demand for the old-fashioned meat. But the anti-meat activists think that they'll win the day in the end. After all, they say, threat of climate change isn't slowing down, and we are more aware than ever of the impact of animal agriculture on it. Additionally, there have been a wave of diseases plaguing livestock, impacting the stock of animals and raising prices on the shelves. Large animal farms are inherently an unhealthy setting and lend themselves to disease. Vegans and vegetarians may still be a small minority, but the downsides of animal agriculture are becoming harder to ignore. As alternatives grow more convincing, more people are likely to make the switch. But science might have something to say about that. The biggest threat to Beyond Meat and to meat alternatives in general isn't on the shelves, it's being cooked up in the lab. The experiments in cultured meat have been going on for over a decade, and they have produced impressive results. This is a form of cellular agriculture where a biopsy of cells is taken from a living animal. Stem cells are then extracted from the sample, placed in a nutrient bath to grow, and the growing cells are isolated into muscle tissue. After a sufficient time to grow, the meat cells are harvested and prepared in a way any other meat would be. And this isn't like meat, it is meat. This process allows for the type of meat to be selected and grown. This will reduce waste, as some parts of the animal are much more desirable than others. For instance, the proper muscle culture for a burger can be isolated. In a more advanced experiment, a chicken breast can be grown without the rest of the chicken. These experiments allow the meat to be grown without hurting an animal. Well, except for the biopsy sample at the start. This will satisfy most animal rights activists, except the vegans who believe that any use of animal products or labor is unacceptable. So this new scientific process may be a meteor aimed directly at the meat alternatives market. The process is still far from perfect and even farther from the mass market. Growing cultured meats takes time and it is expensive, but a few diners at high-end restaurants have already had a taste in exclusive preview dinners. While there have been some quibbles about the taste, most people agree it is pretty close to the taste of normal meat, because it is. And if this process is refined and mass-produced, it could become a massive disruptor for the entire meat and meat alternative industry, which is why many people are trying to stop it. Some animal rights activists oppose the approach, arguing that society should denormalize meat consumption entirely, not just find a more humane way to keep it going. But these are a small percentage of the objectors, mostly consisting of those involved in animal agriculture who view it as a serious threat to their livelihood. This has gone so far that some states with conservative governments or a heavy investment in agriculture have tried to ban the production and sale of cultured meat. So, is there any hope for a humble purveyor of pea protein burgers? Beyond Meat is in a strange place as a company that still has a massive presence on the shelves but is in a precarious financial position. With the way the stock is fluctuating, it could easily go to zero on a wave of bad news, or if too many investors call in their debt. But the company can still be found on the shelves of every supermarket, and its logo can be seen at the top of fast food restaurants. It's lagging in awareness and market share compared to Impossible Foods, but it has some of the top companies around invested in it. Beyond Meat might be in its last days as a company, but don't expect Beyond Meat to go anywhere. The food grid today is composed of many brands, some of which are all owned by the same company. So if Beyond Meat goes bust or is about to, the odds are good that one of those mega corporations will step in and save the day. And the ideal savior might be right there in plain sight. Tyson Foods already owns a share of Beyond Meat and has partnered with it before, so it stands to lose a good deal if the company goes bust. At the same time, the company's massive market cap means that Beyond Meat's debt would be a much smaller factor for it. That would keep the product on the shelf and give Tyson much more control over what they hope would be a growing sector of the market, which would create some ethical questions for vegetarians everywhere. Is the future of one of the largest vegan meat substitutes a meat mega corporation? This would likely open fault lines among the fans of the product, with some who object to the way Tyson does business swearing off the product, while others would just go, "Hey, it tastes pretty good, like a burger." Beyond Meat might be struggling, but surely the king of the burger is still alive and kicking. Check out the real reason McDonald's is failing for the ugly truth about the golden arches, or watch this video instead.